Welcome back to the deep dive. You know how this works. You give us tons of information, and we go through it all looking for the most important stuff. Today, we're looking at the financial performance of Ramkrishna Forgings Ltd.
Oh, I like this one.
Yeah, so we've got quite a bit of material here. We've got financial statements, investor presentations, and we even have a transcript from their latest earnings call.
Very cool.
So you're already familiar with Ramkrishna Forgings. I know you've followed them for a while, especially their presence in the commercial vehicle market.
Yeah, big player there.
So we can really use this deep dive to go beyond just the surface level and get a good understanding of, what's driving their decisions.
Absolutely. Looking forward to that.
Let's kick things off with their recent performance. Their Q3 results look pretty good from what I can see. An 8% year-on-year increase in consolidated revenue.
Very impressive.
Especially considering the slowdown we've been seeing in the commercial vehicle market.
Yeah, that's a good point.
So that tells me they're doing something right. What do you think?
For sure, for sure. What's really interesting to me is how they're managing all this growth. They've got a multi-pronged approach, and it includes a pretty aggressive capacity expansion plan.
Oh, yeah, I saw that.
They're aiming for almost a 50% increase by the end of fiscal year 2025.
Wow.
Yeah, and that includes new facilities in India and get this new manufacturing facility in Mexico.
Well, that's a big move. What are the potential risks there? And the rewards, of course.
Well, the rewards are pretty obvious.
I would imagine, yeah.
Establishes them as a truly global player, and positions them nicely to serve that North American market.
Makes sense.
And I mean, that's particularly interesting when you consider that new order they just got from a North American mining and earth-moving company.
Right.
Huge order.
Right.
But of course, the risks all tie back to the always changing global trade environment.
Yeah.
Especially all the uncertainties around U.S. trade regulation.
It's always a gamble, right?
Always.
Well, they haven't been quiet about voicing those concerns. I noticed that both in their reports and during the earnings call.
Yeah.
It seems like they're really walking a tightrope, trying to capitalize on the opportunity while still being cautious and aware of the potential pitfalls.
Yeah, I agree.
But capacity expansion isn't their only strategy, right? They've been busy. They've made quite a few acquisitions lately. What's the thinking there?
Well, their recent acquisition of ACL Limited really highlights their approach. I mean, this is a prime example of how they're using these strategic acquisitions to strengthen what they offer and broaden their reach.
Interesting.
I mean, ACL specializes in high-precision machining, crankshafts in particular.
Oh, wow.
And this lets Ramkrishna Forgings break into new segments, like tractors and passenger vehicles.
Right.
Which is a pretty big change from their, traditional focus on the commercial vehicle market.
It's a smart move, especially given how unpredictable that market can be.
Totally.
By expanding into these new segments, they're creating a more stable revenue stream for themselves.
Yeah, that's the idea.
But are they spreading themselves too thin?
Well, that's the big question, isn't it?
Yeah.
And it's something we'll need to keep in mind as we look at their overall financial health. At first glance, their financials seem pretty solid.
I agree.
They have a AA stable rating from CRISIL.
Yeah, that's a good sign.
Definitely. Shows financial strength. But as you mentioned, their debt has increased recently, most likely because of these expansions and acquisitions.
Right. And it is something I wanted to touch on. Their consolidated net debt at the end of the quarter, it's quite a hefty sum.
Oh, yeah?
Yeah, significantly higher than what their standalone financials revealed.
Oh, yeah.
So it shows how important it is to look at that consolidated picture. Take into account the debt levels of their subsidiaries, too.
Makes sense, yeah.
Now, they have said they intend to reduce that debt by the end of the fiscal year, but it'll be interesting to see how they manage that, especially with all the pressure from the global market.
Yeah, for sure. Especially with all the volatility we've been seeing.
It's a delicate balancing act, managing that debt while still pursuing an aggressive growth strategy.
No doubt about it. Speaking of interesting details, did you catch that discrepancy in their capacity expansion figures?
You mean the case of the missing tonnage?
Yeah,
Yeah.
exactly. 1,200 metric tons of casting capacity. Just gone.
Well, they did admit during the earnings call that it was a minor error, just a simple typo.
Oh, okay.
It happens. It's a good reminder that even the most carefully crafted documents can have these little mistakes.
Yeah, for sure.
But what I found more intriguing was their silence on the specifics of their cost-saving initiatives.
Yeah, that was a little strange.
They've brought in a consultant, and they're promising that the benefits of these initiatives will be visible in the coming year. But no details.
Huh. Keeping their cards close to their chest.
It's like they're protecting a secret recipe or something.
Could be.
So we've got a company with a strong performance, ambitious plans for growth.
That's for sure.
But we also have these open questions. There's silence about those cost-saving measures, the potential impact of external factors like currency fluctuations, those trade regulations we talked about, and the need to manage that growing debt while they expand. Where should we go next with this?
Well, I think the earnings call transcript is a goldmine. We can hear straight from the company's leadership, understand their perspective on all of this, maybe even pick up on some subtle clues about how confident they are, what their outlook is. Want to take a look at that next?
I'm in. Especially curious to hear what they have to say about those global expansion challenges and how they plan to manage that mountain of debt.
So let's jump into that earnings call transcript.
Right.
I always find it interesting to hear straight from the leadership,
Oh, for sure.
what they have to say.
Yeah.
I was really struck by Managing Director Naresh Jalan's comments on their diversification strategy.
Oh, yeah.
Specifically, what he had to say about their move into the two-wheeler and passenger vehicle segments.
Yeah, that is a major change for them.
It is a big shift, and it's a smart one, I think. When you remember, they've always been so reliant on that commercial vehicle market,
Right.
which can be so up and down.
Absolutely.
So by diversifying, they're not only, tapping into these new customer bases,
Right.
but they're also creating a more stable revenue stream.
It's all about spreading the risk.
Exactly.
So are they actually doing anything about it, or is it just talk?
Oh, they're doing it.
Okay.
Mr. Jalen mentioned they're all set to launch products for these new segments in the next few months.
Wow, that's fast.
It is. And it all ties back to that acquisition of ACL,
Right.
because that gives them the high-precision machining they need to make components for these vehicles.
Instead of starting from scratch.
Exactly. It's much faster this way.
Makes sense.
More efficient.
So they're diversifying,
Uh-huh.
but that's not all right.
Yep.
They're going global.
Global.
Yeah.
Yeah, Mr. Jalen really emphasized their commitment to that expansion, especially the new operation in Mexico.
They're really putting a lot of eggs in that basket.
They are. He sees Mexico as a key hub, for serving those international clients,
I could see that.
especially North America.
Get closer to your customers.
Exactly. It's all about proximity.
But what about those concerns over trade regulations?
Yeah.
I mean, that could really derail things in Mexico.
It could. And Mr. Jalen acknowledged that during the call.
Okay, good.
He admitted they're keeping a close eye on the situation, but he emphasized that their initial focus in Mexico is on serving the local market.
So kind of a safety net.
Exactly. It minimizes the risk of exporting from Mexico to the U.S. with all this uncertainty around trade.
Smart move.
Yeah, trying to balance opportunity with, being practical.
I like it.
So they're going global.
Yeah.
But Mr. Jalen also highlighted something else that I thought was interesting.
What's that?
The importance of India's growth story to their overall strategy.
Oh, interesting.
He's really bullish on the Indian commercial vehicle market.
Is it?
He predicts a strong rebound in demand in the second half of this year.
Wow. So he's putting a lot of faith in the Indian market.
He thinks the post-election stability
Right.
and the government spending on infrastructure projects,
Mm-hmm.
all that's going to boost demand for commercial vehicles.
Yeah, that makes sense.
It's a calculated risk for sure.
It is.
But if he's right, it could pay off big time for their core business.
For sure, big if, though.
It is. Okay, so let's get back to some of those intriguing details we were talking about earlier.
Okay.
Did they mention anything about that discrepancy in the capacity expansion figures during the call?
They did.
Okay, yeah.
They admitted there was an error in the investor presentation. A typo, it seems.
The typo for 1,200 metric tons of casting capacity.
Apparently so.
Wow, okay.
Our case of the missing tonnage
Right.
seems like it was an honest mistake.
All right, well, at least they acknowledged it.
Transparency is always good.
For sure. But what about those cost-saving initiatives? They were really quiet about the specifics.
Still vague on that front. Yeah. They just kept saying that they brought in a consultant and the benefits will be obvious in the coming year.
But no details.
Nope. It's like they're protecting some kind of top secret formula.
Interesting. Okay. So they're being very secretive.
Uh-huh.
But they did give us one little clue.
Oh. What's that?
Mr. Jalen mentioned they're really focusing on enhancing gross margins.
Okay.
And he linked that to their move into larger assemblies.
Ah, so they're moving up the value chain.
Exactly.
Instead of just supplying individual parts,
Yeah.
they're making more complex products.
Higher margin products.
Makes sense.
Classic strategy for boosting profitability.
So their acquisition of ACIL fits right into that.
It does all those high-precision machining capabilities.
Right.
Perfect for producing those complex assemblies.
It's all coming together.
It is.
We know they've secured a lot of new orders,
Uh-huh.
but we still don't have a clear picture of their total order book.
You're right.
Did they talk about that during the call?
They did, but they didn't give us a specific number.
Oh, really?
They mentioned that besides their railway contracts, which have a firm order book,
Okay.
most of their orders operate on a 6-month scheduling system.
So things are a little uncertain.
Yeah, there's definitely some uncertainty there.
Their revenue isn't guaranteed.
Right.
It depends on their ability to keep securing new orders
And fulfill the existing ones.
within that 6-month time frame.
Exactly.
It's a good reminder that even with strong performance and a lot of new business, there are things they can't control.
Absolute.
Brings us right back to those cost-saving initiatives.
Yeah, what's the deal with all the secrecy?
Are they protecting trade secrets, or are there problems we don't know about?
It's hard to say.
One thing's for sure, though.
What's that?
They're under a lot of pressure to maintain profitability.
Oh, yeah.
They're investing a lot in this expansion.
Yeah,
The global market is a roller coaster.
definitely.
If they can implement these cost-saving measures effectively,
It could make all the difference.
it could.
Speaking of crucial aspects, the earnings call also gave us a glimpse into their financial health.
The lifeblood of any business.
Isn't it, though?
We know they have a good credit rating, and they seem confident about managing their debt,
They do.
but it has increased significantly.
It has.
They said their consolidated net debt at the end of the quarter was around 1,500 crores.
Whoa.
Big jump from the previous quarter.
Yeah.
Way higher than their standalone financials show.
Okay, so they have a plan to reduce it, though, right?
They do. They're aiming for a consolidated debt level of around RSOW's 1,240 crores by the end of the fiscal year.
Ambitious.
It
Do
is.
you think they can pull it off?
If their growth plans work out and they manage their working capital effectively,
Yeah.
maybe.
So working capital is key here.
It is.
What'd they say about that?
They admitted it was still elevated.
Uh-oh, why is that?
Delays in shipments mostly,
Right.
higher inventory levels.
Uh-huh.
They blamed some of it on the ongoing Red Sea shipping issues.
Oh, right.
You know, that global supply chain mess?
Yeah, that's been a nightmare for everyone.
It has. It shows how even the best plans can be disrupted by external factors.
Absolutely. Another layer of complexity to their debt reduction goals.
So we've got a lot going on here.
We do.
Ambitious growth plans,
Uh-huh.
strategic acquisitions, global expansion,
Yeah.
uncertainty about trade regulations, a volatile currency market.
Right.
And then they need to manage their debt and their working capital.
It's a lot. It's business, though, right?
It is. It's why we do these deep dives.
That's right.
Peel back the layers.
Get to the heart of it all.
So we've looked at their financials, their growth strategy, their challenges.
Uh-huh.
We've heard what they had to say during the earnings call. What's next?
Well, a few key themes have popped up.
Oh, yeah. Like what?
Well, their bet on India's growth.
Right.
Their strategic focus on aluminum forging.
Good point. And we haven't even touched on their sustainability initiatives yet.
Oh, yeah, that's true.
Yeah.
They're committed to net zero emissions by 2040.
That's a big one.
It is, I think, a deeper dive into these areas could tell us a lot about their long-term prospects.
And potential risks.
For sure.
Want to shift gears then?
Yeah.
Take a look at their sustainability report.
Let's do it. I'm curious to see how they're incorporating their sustainability strategy into their actual operations.
Me too, and
Yeah.
what they're doing to hit that ambitious net zero goal. Okay, so let's talk about sustainability. It's a hot topic these days.
It is. For every company, really.
And Ramkrishna Forgings, they've set a target of net zero emissions by 2040.
Ambitious.
Very ambitious,
Yeah.
especially for a company in heavy industry like forging.
Yeah, it's not easy.
So what stood out to you in their sustainability report?
Well, their overall approach, I think, is what I found most interesting.
Yeah, okay.
They've laid out this 5-pronged strategy.
5 prongs.
Yeah. So it's environmental consciousness,
Oh.
valuable partnerships,
Uh-huh.
rewarding workplace, empowered communities,
Wow.
and robust governance.
So it's more than just reducing emissions.
It's about making sustainability part of everything they do.
A holistic approach.
Exactly.
Okay, so how are they actually putting this strategy into action?
Well, they're tackling a few things at once.
Like what?
Water management, for one.
Okay.
They've really cut down on groundwater consumption,
Good.
and they've increased their wastewater recycling rate.
Very nice.
Their goal is to become a zero liquid discharge facility.
That's impressive.
It's a big step towards water conservation.
And they're also making progress with renewable energy, right?
Yeah, they're doing well there.
I saw they increased their renewable energy consumption quite a bit.
They did, and they're taking steps to boost their rooftop solar capacity even more.
I like it.
And get this, they signed contracts to get a lot of renewable energy through open access in Harkand.
Wow.
That's huge.
Yeah.
It really reduces their reliance on fossil fuels.
So they're putting their money where their mouth is.
They are.
But what about those Scope 3 emissions?
Yes, the supply chain.
Those are tougher to control.
They can be.
Because it's not just them.
Exactly.
It's everyone they work with.
They know it's a challenge, and they've started implementing this ESG supplier assessment framework
Okay.
to improve sustainability throughout their supply chain.
What does that involve?
Well, it assesses suppliers on all sorts of ESG factors.
Environmental, social, governance.
Exactly,
Okay.
including their environmental performance.
Okay.
And they're also working on procuring green steel,
Interesting.
which would significantly reduce the carbon footprint of their products.
So it's a team effort.
It is. You can't reach net zero alone.
Everyone has to be on board.
Exactly. And they're not just setting requirements for their suppliers.
No.
They're actively helping them transition to more sustainable practices.
That's great. So they're taking a proactive approach.
Definitely.
What about the social side of things?
Well, they've done a lot there, too.
What have they done?
Provided ESG training to almost all their permanent employees.
Okay.
And they got that Great Place to Work certification 2 years in a row. They've also got these community support programs.
Oh, yeah. Like what?
A street lighting project in a local community, for example.
That's great.
It seems like they're really taking a comprehensive approach to sustainability.
They are looking at the whole picture.
Environmental impact, but also social and governance aspects.
So is their sustainability strategy truly integrated into their overall business operations?
I think so, and that's what's so impressive.
It's not just a side project.
No, it's woven into their business strategy.
They're connecting their sustainability goals to their growth plans.
Exactly, and to their risk management and even their financial performance.
It makes sustainability is a big deal now.
It is.
Investors care about it, customers care about it, employees care about it.
Absolutely.
Companies can't ignore it anymore.
Not if they want to succeed.
And Ramkrishna Forgings, they get it.
They do. They're making sustainability a core part of their business.
It's not just about checking boxes.
Nope. It's about doing the right thing.
All right, so as we wrap up this deep dive into Ramkrishna Forgings,
What's the key takeaway for our listeners?
well, Ramkrishna Forgings is a company on the move.
Definitely.
They're ambitious, they're innovative,
Uh-huh.
and they're taking risks to grow.
Calculated risks.
Of course, they're facing challenges too.
Yeah.
The global market's unpredictable.
Right.
They need to stay profitable.
It's a tough balancing act.
It is, and their sustainability journey is just getting started.
It is a journey.
They've set some big goals.
They have.
It'll be interesting to see how they do.
It will, but here's something for our listeners to think about.
Okay.
As they follow Ramkrishna Forging's story,
Yeah.
how will their focus on aluminum forging affect their position in the electric vehicle market?
Interesting question.
Especially as more and more countries start phasing out combustion engine vehicles.
Something to keep an eye on.
It is. That's all the time we have for today.
Wow, that went fast.
It always does. But we'll be back soon with another deep dive.
Looking forward to it. Until then, keep learning, keep exploring, and as always, thanks for listening.